Welcome to another market analysis video. It's been 3 weeks since the last video, and since last time we spoke about the pound dollar, I thought we could revisit the pound dollar and see what's happened in the last 3 weeks. As you may recall, price was right here the last time we spoke about the pound dollar, and my personal bias was bullish for reasons that I explained, but my recommendation was to wait for a pullback before entering long. One thing I want to briefly mention is that as a trader, it's very important not to be stubbornly or rigidly stuck on our bias. I find this happening to me all the time, where I'll spend a lot of time analyzing the market and I come up with a list of reasons of why, in this case, it should go long. And if I stick to that analysis too strongly, I can easily get burnt because I can be entering multiple positions thinking that price is going to reverse and go the direction that I want it to, and sometimes it doesn't. It's better to be able to divorce ourselves and even switch to a completely different bias. Switch to being willing to go short when we were considering going long the whole time. So just consider that, because it's very easy to get burnt when holding on to our bias for too long and too rigidly. So basically what's happened over the 3 weeks is we had a bounce pretty much right off the 61.8 level, and price did reverse. Now let's see where it reversed to before the NFP news release. It reversed almost exactly to the 50% level, and at that point price bounced and drove back up again with a good strong move. And just several days after that, we had another news release which drove the market even more. Mind you, there was some serious trickery going on here, and I'm sure a lot of people probably suffered through that. But this was the Bank of England's inflation report. Between the NFP and the inflation report is where we really got most of our movement. So that just basically denotes that news really does drive the market, and even if we have a technical viewpoint of the market, it's good to know when those news releases are coming, because that's usually when the market is going to do most of its movement. I'm going to remove the fib tool just for a second. I'm going to zoom out, and there's one more trend line that I want to draw. It's from this swing over here to the next one, which was right there. And the reason I'm going to do this is just to once again show you the power of using trend lines and channels for identifying support and resistance. I really enjoy using horizontal lines to gauge support and resistance, and horizontal lines are great, but they're not the only kind of tools that you can use. So that's why I want to show here that all of these channels that we've drawn here have been really good gauges for support and resistance. And sure enough, based on that last trend line that we just drew, we did have a reaction up here. You can see that for several days price bounced off of that trend line again. It wasn't a strong enough bounce though to reverse. It just gave a breather before its continued move to the upside. So in short, what happened is we had a bounce back into the channel area, even below, probably some trickery going on here. And if we look down at the 4-hour, I bet you these candles here were enticing a lot of traders to go short and probably stopping out a lot of other traders. These are really the interesting levels to look at, is when you have extreme highs and lows and you see some play in that area. At any rate, price did reverse, and as expected, the uptrend has continued. Now we're currently back in this channel again. And let's just take a peek here at where price came back to on the news release of the interest rate from the Bank of England. Do you see that? It came right back to the trend line, or the bottom of this channel. And to the T, really to the pip, it reversed right there. So that's it for this video. Just want to point out the power of reading price on the higher time frames and learning to use a few little tools, which anyone can really use, to gauge support and resistance and possible bias. But remember, don't get married to that bias. Be willing to divorce it when you need to, and switch your mind and even go the opposite direction if that's what the market is calling for. All right, have a great week. If you have any comments, please feel free to leave them, and I'll talk to you again next time.